We're jumping straight into Lucid Group today. Everyone is watching the price action, but the real story is the Rockwell Automation partnership and the massive shift to Saudi manufacturing.
Exactly. You're tuned in to the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And hey, before we really get into the nuts and bolts of all this, do us a quick favor. Go ahead and hit that subscribe button. Give us a like. We're here to cut through the noise for you, and you really don't want to miss what's coming next.
It is. It's a very noisy market, for sure. And, for a long time, the noise around Lucid was pretty much one note. And frankly, it was a grim one.
Oh, yeah.
It was just this loop of bankruptcy risk, cash burn, can they even make it another year?
Right.
But then you look at the tape today, Thursday, January 22nd, 2026, and that whole story seems to be flipping. I mean, violently flipping from survival to growth and partnerships.
A massive reversal.
Yeah.
I'm looking at the chart right now, and Lucid shares just posted their best day in, 6 months?
6 months, yeah.
We're talking a surge of 13 to 18% in just one session. For a stock that's been so beaten down, that's a serious move.
It is significant, but we've got to be careful. We've seen these kinds of pops before, and they've just fizzled out.
That's the thing, because if you zoom out, this stock got absolutely hammered in 2025, down something like 65%.
Yeah.
Investors were basically sprinting away from it. So I guess the big question is today just a dead cat bounce? Or is this, the actual start of the turnaround everyone's been waiting for?
That really is the billion-dollar question, isn't it? Because price action is one thing. Momentum traders will jump on anything volatile.
Of course.
But we need to know the why. What's the fundamental driver here? Why today? Why did the market suddenly wake up and decide Lucid is a buy again?
It's got to be that headline I mentioned at the top, the Rockwell Automation deal. Okay, but let's be honest. On the surface, car company partners with automation company. That sounds, it sounds incredibly boring. It's the kind of press release I'd probably just delete. So why is this being treated like such a game changer?
Because you have to read between the lines.
Mm-hmm.
This is not just them buying some new robots. This is all about the Saudi Arabia facility.
Right.
Lucid's big pivot isn't just about making cars in Arizona anymore. They're going all in on this massive manufacturing hub in King Abdullah Economic City.
Right. But where does Rockwell fit into that specifically? Why them?
It's all about the software, the digital thread. Rockwell isn't just selling them hardware. They're building the entire digital backbone of that factory. The software, the manufacturing execution systems, the MES. That's the key to making the factory actually scale.
MES. Can you break that down for us real quick? What is that?
Think of it like the factory's central nervous system. It tracks every single part, every screw, every robot, all in real time. It connects the engineers in California to the assembly line in Saudi Arabia.
Oh.
See, Lucid's problem has never been designing an amazing car. The Air is a phenomenal piece of engineering.
Absolutely.
Their problem was production hell. They just couldn't build them fast enough or cheap enough.
So bringing in a heavyweight like Rockwell is kind of an admission that they need adult supervision to scale up.
In a way, yeah. It validates the whole Saudi plan. It tells investors, look, this isn't just a PowerPoint slide anymore. We are installing the brain of the factory right now. It's a signal that they're shifting from startup mode to real industrial mode.
And you can already see them starting to claw their way out of that production hell, right? The growth numbers from 2025, they're actually kind of staggering if you ignore the stock price for a minute.
The year-over-year growth is, it's pretty impressive.
They more than doubled production, didn't they?
They did. Production surged 104% in 2025. They got over 18,000 cars out the door. Now, compared to Toyota, that's a rounding error, but for Lucid, that's huge.
Revenue followed, up about 68%. But there was one number that really jumped out at me. In December of 2025, they hit a run rate of 1,000 vehicles a week.
That is a critical milestone.
1,000 a week. That feels different. That sounds like a real factory that's actually, humming along.
It implies an annualized rate of over 50,000 vehicles. That changes the entire financial model for them. It moves them out of that niche builder category. But, volume doesn't matter if no one wants the cars.
Which is the perfect segue to the Gravity.
These SUV.
The Gravity SUV. For so long, they were a one-trick pony with the Air sedan, which, let's be honest, is a tough market. The Gravity is their big play, and it just won the Motor Trend 2026 Best Tech Award.
And that's a big deal. Motor Trend Awards carry a lot of weight.
They do. And it seems like demand is there, even with that price tag, which is steep. You're looking at well over 100 grand.
It's firmly in that ultra-luxury space. It's
Yeah.
going up against Range Rover, the G-Wagon,
But here's the really interesting part, the conquest sales data.
meaning they're stealing customers from rivals.
Exactly. And they're seeing trade-ins from Rivian owners.
Now that is fascinating. Rivian has a cult-like following.
Right. To see an R1S owner trade in for a Gravity, that's a huge signal. It suggests Lucid's tech advantage, the range, the efficiency. It's actually winning people over. It proves the brand has pull.
It definitely validates the product. And you knew there was a but coming.
I did. Here it comes.
You can have a great factory and a great product, but none of it matters if you run out of cash. We've seen so many EV startups with cool cars just go bust.
Liquidity is everything in this game.
It's oxygen, and this is where Lucid has their ace in the hole.
The Saudi safety net, or what I call the ultimate rich uncle.
It's such a unique situation. The Public Investment Fund, the PIF, owns roughly 60% of the company.
60%.
Mm-hmm.
They're not just an investor, they're the owner. And they keep writing checks. Lucid has about $5.5 billion in total liquidity right now.
And that's after the PIF put in another, nearly $1 billion back in November?
It changes the entire risk equation. Most companies with Lucid's financials, which we're about to get into,
Which are not pretty.
they'd be staring down bankruptcy.
Yeah.
But here, that risk is sort of postponed. They have a cash runway until at least mid-2027.
Right. It takes that immediate Chapter 11 fear off the table. And that gives investors the confidence to actually look at the growth story. The PIF needs Lucid to succeed as part of their Vision 2030 plan.
The flagship project for them. They need cars rolling out of that Saudi factory.
Exactly. And then you have the really long-term stuff, like the CES reveal.
The robo-taxes. The partnership with Uber and Nuro.
It's a dream for the future, sure, but it paints a picture of a high-margin business down the road that isn't just about selling cars.
Okay. Let's pump the brakes. I feel like we're getting carried away with the bull case here.
Let's break that down even further. Having a rich uncle doesn't mean you know how to spend money wisely.
Thank you. Because as exciting as all that is, the bear case is. I mean, it is just ugly.
It all comes down to the unit economics.
It's a cash bonfire. Let me give you a stat that is just, it's mind-boggling. In Q3 of 2025, for every single car that Lucid sold, they lost about $176,000.
Wait, let's be clear. That's not the price. That is the loss on top of the revenue they brought in.
Yes, they collect 100 grand from the customer, and then they lose another 176,000 on top of that. How is that even possible?
It's called a lack of fixed cost absorption.
Okay, explain that.
You build a giant factory that's designed to make, say, 90,000 cars a year. You have to pay for the building, the robots, the staff, the electricity.
Right.
Whether you make one car or 90,000.
Right. The overhead is fixed.
But if you only build 18,000 cars, each one of those cars has to carry a massive slice of that overhead.
So the more they sell right now,
The more money they lose. Their net loss was over $1 billion in one quarter. Just poof, gone.
and this is the fundamental problem. The business model is broken. They're burning cash at a rate of about $7.4 million a day.
Say that number again?
$7.4 million per day.
That is terrifying. Even with $5.5 billion in the bank, that runway to 2027 suddenly looks a lot shorter if they don't fix this.
And fixing it requires flawless execution. Which brings us to the next issue. The gremlins.
Software bugs.
Yeah, the Gravity is a great piece of hardware, but we're hearing reports. Key fobs failing. Navigation screens freezing.
And when you're paying $100 grand for a luxury SUV, your key has to work every single time.
Exactly. It kills your brand reputation right when you need it most. You can't ask customers to pay 6 figures to be your beta testers.
And that pushes out the profitability timeline even further. The consensus now is maybe they're profitable by 2028?
2028, that is a long time from now. A long time to keep burning $7 million a day.
Which leads to the final bear point, that Saudi safety net. It's also a risk.
The double-edged sword.
Absolutely. When one shareholder has that much control, especially a sovereign wealth fund, the stock doesn't trade like a normal company. It becomes a geopolitical asset.
You're not just betting on a car company. You're betting on the strategic vision of Saudi Arabia.
So we have amazing tech losing a massive amount of money. What triggers the next move? What should people be watching for?
Okay, if you're in this stock or thinking about it, there are a few key dates. First up, the big one, Investor Day.
March 12th? 2026.
Circle that on your calendar. This is where they have to deliver. The market wants details on new partnerships for sure, but the main thing is a mid-size platform.
The cheaper car, the so-called Tesla Model Y killer.
Exactly. They have to move down market to get the volume they need to fill those factories. We need to see what it looks like, how much it costs, and when it's coming.
And before that, we have Q4 earnings coming up any day now.
Right. We know production was good, but it's all about the margins. Did that loss per vehicle, did it shrink at all?
It has to. If that number gets worse, the stock is going to get punished, regardless of production.
And finally, sometime in the first half of this year, we need to see the Saudi plant actually come online.
Not just a press release. We need to see actual cars rolling off that assembly line and getting delivered to customers.
Okay, so let's tie this all together. What does this mean for someone listening right now?
It is not a stock for the faint of heart.
No. I think the way to frame this is as an asymmetric bet. The stock completely capitulated down to $11. The bankruptcy fears, I think, created a floor.
All the weak hands have been shaken out.
Exactly. So with the Saudi backing and the Rockwell deal, that going to zero thesis is off the table, at least for now. So you have a somewhat capped downside.
But the upside, if they get it right, is enormous. Analysts are talking 40–50% upside from here.
It's a high-risk, high-reward play for the next year or two. It's either a slow burn as they bleed cash, or it's a rocket ship if they can finally fix the business model.
A tech is real, the cars are real, but the business itself is still very much under construction.
That's the perfect way to put it. You're not buying a finished house. You're buying a construction site designed by a genius architect.
But you're not sure if the plumbing is going to work yet.
Exactly.
That's sad.
That's the lowdown on Lucid. Keep your eyes on those margins and watch that March date. Keep your eyes on the road.
And stay curious.
And make sure you're subscribed. You don't want to miss our next one. We'll see you then.